Hey everybody, this is Chris Tyler of OptionsCAT Stock Trading. In episode 8 today, let's review the latest price action in the heavily traded SPY, QQQ, and Diamond ETFs, as well as the influential Magnificent 7 stocks, and why the second time, as we'll explain, could be the charm for bullish investors. But first, and before we dive into today's video, following a rather chaotic period of March madness this past week and a slippery start in Monday's first half of play, the Bears' full-court press could finally be nearing completion. After failing to materialize early last week, a critical high-powered bullish thrust session known as a follow-through day, or FTD, is now on the table once again after Monday's undercut of lows in both the S&P 500 ETF and tech-heavy QQQ. Now, in the background, we have the Diamond, or Dow Jones Industrial 30 ETF, which has actually shown a bit of relative strength over the past week as it remains above its March corrective bottom. Perversely enough, though, it's the other weaker averages which are actually in a more favorable position to help kickstart a meaningful bull market cycle. If we now take a look at both the QQQ and SPY, and right now we are looking at the NASDAQ 100, we can see the prior lows from early March failed as of this morning's session in this particular ETF, but it did the same in the SPY too. But that weakness actually belies a fresh rally attempt low that's already signaled in the broad-based S&P 500 ETF. And let me just pull that one up for a second. We can see that with the S&P 500, what happened is after undercutting the March lows, shares of the SPY ETF rallied strongly to close higher on the session above Friday's close, and this confirms the rally attempt. Now, the NASDAQ wasn't able to do that by a fraction of a point, but we could have a rally attempt in there too as early as tomorrow if it closes higher. Now, once a rally attempt is in place, the FTD count begins, or follow-through day count. And it's during days 4 through 7 of the count, which are historically the window for a bullish trend change signal to occur. No modern bull market has ever happened without an FTD in place, so it's important to say the least. And for the S&P 500, Tuesday, remember, marks day 2 of the count. On a side note, early last week, OptionsCAT noted some bullish price history for the major indices, given the severity and speed of the sell-off from February's record highs. According to market strategist Ryan Detrick of Carson Group, since 1950, 7 other occurrences with similar price action all resulted in 3- and 6-month new highs for the broader averages. At this point, though, one might wonder whether the data set was simply too small to be reliable, and does the pair of undercuts in the S&P 500 and NASDAQ doom that record? Or, conversely, could the streak remain alive with new highs to come in the broader market? I personally believe that's the case here, as the market does rhyme a lot more than being a complete replica of past events. And coupled with the hunt for a new bullish FTD to form this week, a pair of overly fearful VIX signals from 2 weeks ago at the March lows, and the market's largest capitalization stocks in the Magnificent 7 appearing extremely oversold on their price charts, the technical case for a bottom to emerge and a bull market to follow are highly plausible. Of the names NVIDIA, Microsoft, Alphabet, m.i.a, Tesla, Amazon, and Apple, 5 of the Magnificent 7 have hit new intermediate lows one day. Only shares of Tesla and Apple stocks remain above their own bottoms. I continue to like Tesla's hammer pairing, which we are showing on the screen currently on the weekly view. It's a turning point out of a severe bear market, in my view, and politics aside, this is a stock doused in too much pessimism. That all said, an out-of-the-money bull call spread constructed for around 5% of Tesla's share price remains a favored strategy, and being placed out of the money today looks even more reasonable given Tesla stock's own pullback the past few sessions. Now let's go to Microsoft. Of the Magnificent 7 stocks that failed to hold their March lows, Microsoft is the most oversold of the group based on its monthly stochastics. I'm showing that here. It's actually the only one in the group whose stochastics are actually in oversold territory, complemented by a bullish crossover from that same indicator on the weekly view. That's shown here. as well as 8 months of a corrective consolidation shaping up as a bullish W or high-level double bottom, I'm upbeat on stocks prospects. For this particular situation, what I like is the May 2nd weeklies bull call spread using the 380 and 400 strikes. What this allows the investor to do is have a limited risk position for about 2% of Microsoft stock risk. It also has an embedded earnings cycle in it to act as a potential upside driver for the shares, and all told is a reasonable way to get long deltas and capture some very nice profits as a bullish investor.